Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We have a busy week today, but not only that, we have kind of an explosive Hogs and Pigs report to talk about, which we'll get to a little bit later. But as we get started, let's recap what happened this week in the markets.
Yeah, and I'll say a good week in markets generally as well, Megan, as we look through those. It's probably been a first time in a long time that we could talk about really everything across the board being up. If we start on the cattle side, cash cattle were about $1.25 higher this week. Those feeder cattle markets were, I'm going to call them steady on the week. We had a little up, a little down through the week. April live cattle futures contract was up nearly $2. And that April feeder cattle futures contract was up $5.75 on the week. On the beef side, we did get increases in the choice box beef price this week, up a little more than $7 on the week. We had strength across the board in all those beef components this week. On the hog side, cash hogs, another pretty strong week, up nearly $5 on cash barrel and gilt prices. The lean hog futures contract for April was up about $6.50. We also saw the pork cutout value up another $5.25 this week. That puts it almost $30 above year-ago levels, and it was a pretty strong week in belly markets this week.
More bacon subscriptions, and we're heading into my favorite part of the year, which I would call BLT season, right?
That's right. I hope folks got their bacon bought earlier because it looks like it's going to get a little more expensive.
We have an entire compartment in our freezer for bacon. That's how much bacon is loved in this house with two little guys and everybody else. So we're going to talk a little bit of slaughter first. Kind of an uptick, or a small uptick at least, as we look at both beef and hog slaughter this week.
Yeah, that's right. USDA is calling for the week ending March 27th, 646,000 head of cattle that'll be slaughtered this week. That's 19,000 more than we slaughtered last week, but it's still almost 6% below a year ago level. On the hog side, a similar story here, 2.551 million head of hogs to be slaughtered this week. That's 27,000 more than we slaughtered last week, but that's almost 8% below what we did a year ago. So we continue to lag generally relative to year-ago levels in slaughter of both cattle and hogs.
Is that just kind of a lull at this point, potentially in supply, that's causing us to pull back, or is it more seasonal?
So I think we're really looking at what's a broader pullback in terms of available animals at this point. Now, you know, when you look at year-to-date numbers that we'll get to talk about here in a minute, I also remind us we had some pretty cold weather that slowed slaughter for a period of time. That also has to be factored into just how much of this is that kind of weather issue versus just fewer animals ready for market at this point.
As we get into our chance to recap this week's report, let's talk reports rather. There were multiple. Let's start first with cold storage, and as we take a look at those ending stocks.
Yeah, so pretty good news, I think, and I shouldn't say pretty good news out of what we got in terms of ending stocks for February. If you look at beef, pork, chicken, and turkey, about 2.1 billion pounds of those four meats. That's about 13% below year-ago levels, so tighter in total. Chicken down 16%, just to talk about it's everything that's been lower. On the pork side, 24% lower pork stocks. Bellies, 38 million pounds of bellies in freezers at the end of February, almost half the level of a year ago. Beef up in that ending stock number at 511 million pounds for February of 21. But that's only 3.3% above a year ago level. So pretty good news out of that cold storage report we got this week.
Obviously good news for part of it, but do we get concerned about potentially a bacon, I don't want to say shortage, but higher bacon prices as we look at that drawdown so much from where it was a year ago?
So perhaps we're going to get a little more volatility. We've had, I think belly prices have been known for a lot of volatility, but I think when you look at 38 million pounds, that tells me there's going to be weeks where we get pretty good run-ups like we did this week, and other weeks where we'll come back down as well. So It's tight, that's for sure. And if you're a producer, maybe you're happy with the opportunity for some higher prices that come with that tightness.
Make sure you check your bacon stocks before you go to the grocery store.
That's right.
All right, let's talk livestock slaughter as we take a look at those numbers. Any surprises in anything that jumps out at you this week?
So I don't know if there's surprises in the report, but again, I want us to remember, you and I have been playing the same recording for years. And I say that on purpose. Production of meats has been growing the last 5 years. I think about somewhere around 15 billion pounds more beef and pork in 2020 was produced than in 2014. But for the first time in a while, we're talking about less production relative to a year ago. I think that's helped us with some higher prices, especially on the pork side. So as we look at what we got out of the slaughter report this week, cattle slaughter down 2.6% in February of 21 relative to the previous year. Yes, cattle weights were 8 pounds higher, about 1%, but in much better stead than we would have been mid part of 2020. You add those things together, and that gives us beef production that's trailing year ago by 1.2%. Same thing on the hog side. We're down hog slaughter 2.7%. Yes, weights for hogs are also up, but 2 pounds relative to the previous year, about 0.9%. So that gives us pork production that's down almost 2% as we look at the first 2 months of the year. So I think shorter supplies have been helpful in getting us some higher prices. And we don't want to forget that we're in a much different place on the supply side than we've been for a while.
And demand is continuing to hold strong and grow too as we look at the big picture of what this means to the economics of it.
Yeah. So you're correct, Megan, and it's not just supply. It's now weaker supplies against that strong demand that could give us some really good opportunities as we look ahead to price both cattle and hogs. Let's hope that's the case at least.
All right, now we get into the fireworks of what the Hogs and Pigs report, and really, as we take a look at this, probably some of the most interesting numbers I think that have come out of a Hogs and Pigs report in quite some time.
Yeah, I think it caught a lot of us maybe with expecting bigger numbers than we got out of the report. I'll start with a few here. So kept for breeding down 3.5% relative to the previous year is what we got out of the report. That was very near the low end. And I've often said it's really hard to slow down the supply side of the pork industry with just the large capital outlays we have in facilities. But down 165,000 head of sows over the last year, it reminds me that we can make the supply side move lower. I think the numbers that have grabbed some attention really come on the market hog inventory side. So down nearly 2%, 1.8% kept for marketing out of that report. That fell outside the range of pre-report estimates. So for me, when I look at that, I think we have a situation where we've got a lot of tighter supplies coming here in the near term out of that report. And again, I think we see where futures went, at least early in the day. We were pretty strong, and it tells us we could keep these prices up there for a period.
So I want to talk about the pigs per litter number. As we take a look at that, this wasn't just the first time in recent memory that pigs per litter number has declined.
Yeah, that's right, Megan. If you look at pigs per litter on a monthly basis, 7 out of the last 9 months, so those 9 months ending February of 21, we've been down in pigs per litter relative to the previous year. You look back June, July, August, September, October, all lower. I might suggest those could have been pigs that were euthanized as a result of just no shackle space back in the mid part of 2020. But when you look at December, we were down 1.4% on pigs per litter, January down 0.5%. To me, I think there's where some PRRS may have been affecting pigs per litter that we probably didn't anticipate. Just another reason why I think we've tightened the supply side of this industry up a lot here over the last quarter or so.
We talk a lot about the whole supply and demand relationship. Obviously, demand strength has been strong. Prices have been supported by the demand strength and by this lull and maybe decline in available market-ready animals. Does this signal, or could this signal potentially some expansion or rebounding or growth in the hog industry? And what do we need to think about when that comes to the big picture, especially as we're looking at tight corn and soybean ending stocks and all of these other contributing factors that may see rising inputs?
Yeah, so I think it's a little early to make that call. So I say again, let's look. So we had Iowa, Missouri, North Carolina, all down 40,000 head in terms of breeding inventory out of the report relative to the previous year. Minnesota down 30,000 head. So with the exception of North Carolina, you saw all of this in really what I'll say is the Corn Belt area of hog production is where we've seen that sow inventory decline. Profitability is not as great as what we've seen hog prices increase as we've had to feed some much more expensive soybean meal and corn. You know, I'm not sure that folks are gonna think too hard about expansion until they see a little bit more about acres of corn and soybeans that get in the ground here. You know, get a prospective plantings out here next week, give us some indication, but getting into the spring and seeing what really gets in the ground, I think could then be the sign that pork producers want that. So maybe the second half of 2021 isn't quite as good as we might find the first half if, again, we find producers back farrowing more sows, increasing pigs per litter, having a little more breeding inventory.
How does also the global demand picture, and I think about even domestically COVID recovery, how our economy is bouncing back or is working to bounce back, play into not just the bottom line for pork producers, but the beef industry and beef producers as well?
Yeah, it's hard not to be excited when you see what's happening from the demand side. So I think, beef trade's been positive. A lot of that's due to China. Pork trade's not been terrible as we've started 2021. We haven't seen the same kind of growth we would have seen in 2020, but China's continued to be an okay market in terms of pork exports for us. And when you realize some issues with ASF there resurfacing, you got a lot of people anticipating some growth coming. But for me, it's the domestic market. You hit the nail on the head here of, we got folks that are ready to get out. You look at how many places are trying to open more generally. And I go, the first thing people want, I want to go have a good meal. And you'll hear me say all the time, that's probably some good steak, but then it's probably also a good burger with a piece of bacon or 2 or 3 or 6 on top of it. That I think creates some demand for both beef and pork going forward. So demand looks good. Again, to the second half, I'll keep saying no more. If we don't have any more stimulus, do folks in the second half of 21 find themselves with less money in their pocket? And so we might get this big push in the first half of 21 against tighter supplies than we anticipated. But the second half of 21, we get consumers with a little less money in their pocket. They've filled their bellies as they got out and got a chance to kind of re-engage, and they kind of hold back up, and then more supplies. So I can be more bullish near term and maybe a little more concerned longer term about how supply and demand shake out for these industries.
So proceed with caution.
I think to the risk management side, folks have to, so there's some good opportunities for risk management right here. And my baseball analogy here, I'll take a lot of singles and doubles rather than trying to hit the home run all the time. And I don't know when to tell folks to pull the trigger. If I was really good at that, I would be doing it myself. But there are opportunities to let somebody else have this risk at some point in time.
Scott, that'll do it for us today. A full plate for us to get into, and I appreciate your time as always as we look ahead to next week. You mentioned prospective plantings earlier, but we'll also start to take a little deeper dive into the demand side of things as well.
That's right. You and I'll have to get our pool going on corn and soybean acres before the report gets out next week. But we'll get that, as well as then the demand side with the restaurant performance index and a jobs report to finish next week.
Scott, have a great weekend. Enjoy another full weekend of basketball. And actually for you, it's probably baseball season's getting underway. So you're quite happy with that as well.
We've kind of forgotten about basketball at this point here in Missouri, Megan.
I'm pretty sure Kentucky tried to forget about their basketball season, but my husband is still mourning Purdue's loss last week. So definitely just excited to have sports back in general for some return as we push back towards return to normalcy.
It is nice to have sports going, that's for sure.
All right, Scott. So have your weekly, we will see you next Friday to have our weekly livestock market update delivered to your email box every Saturday morning. Visit our website, brownfieldagnews.com. You can also submit questions and comments there. And as you're getting ready to start planting season, if you need some great listening material, go to brownfieldagnews.com/podcast and check out all of the great podcast and content there. Have a great weekend. I'm Megan Grebner for Brownfield.